Previously on Dry Powder, Ian Charles, the managing partner at Arctos Sports Partners, took us inside his approach to sports investing. The conversation was truly a masterclass in advanced analytics and value creation that you don't want to miss. But Ian's impact extends far beyond sports investing. Today on Dry Powder, Ian will walk us through how he's helped a remarkable series of innovations in the secondaries market. We'll dive into the creative transaction structures that have made secondaries more accessible and efficient, and we'll explore the next wave of innovations that could shape the future of this market.
Anytime I've looked around and there was a lot of people trying to do what we were doing, it made me nervous. I'd rather be alone and exploring areas that other people haven't already sort of trampled over. And that's really served me during my entire career.
I'm Hugh MacArthur, chairman of Bain's global private equity practice, and this is Dry Powder. In all the time that I've known you in your career, you've always seemed to go after the non-obvious ideas. How did you develop this habit of going off the beaten path?
I think you got to be a little bit of a weirdo. I grew up in a small town in Alaska. One of the things that you always heard as a kid was, if you go out on the frozen lake, make sure you're not around too many of your friends. It's actually safer to be all alone. Because if you get too much weight in too small of an area too early in the season, you're going to break through, and it's dangerous. It's way better to be alone. It's safer to be alone. When we started Cogent Partners, and some of your audience may not even know what Cogent is. It's been so long. A lot of LPs know it as Greenhill Cogent. It was the very first advisor ever in the secondaries market. So many people told us it was a bad idea. It's not going to work. The market doesn't need it. You guys don't have the skill set required. Why would somebody hire you? Why would somebody hire anybody? But it turned out there was a huge market need, and we had this data-driven hypothesis. It just took courage to go after it. And I tell all of my younger colleagues to be curious, but also have courage. And I've been drawn to things throughout my career, whether it was innovating around the very first pref deals ever with a limited partner, or a pref deal with a GP, first ever. The first continuation trades. They didn't call them continuation trades back when we started it, but like writing that intellectual property and implementing that intellectual property across different parts of illiquid markets, that's fun, right? Being the first to do a lot of stuff, that's where alpha gets harvested and is bountiful.
It can feel dangerous, though, can't it?
100%. Yeah.
I can find the logic incredibly persuasive. And I'm someone, when I think about being on the ice, I like to be alone too, but that's typically because I have a fishing rod in my hands and I want to catch the fish. I don't want anybody else around me drilling holes and catching all the fish, but it's the same kind of principle. It can be better and safer to be alone. But when you talk about things like pref securities and continuation funds before there was such a thing, they were very new and innovative ideas at the time. There had to be skeptics around saying, well, Ian, maybe there's a reason it hasn't been done, right? Maybe there's a reason it hasn't been done because it's not a good idea. So how do you win over the skeptics when you're innovating in a situation like that?
Well, look, sometimes you can't. I remember designing like a really simple kind of pref security to solve a very specific issue that a GP was trying to think through. And I remember one of my colleagues said something like, if a deal needs structure, it's probably not a deal worth doing. I just thought to myself, like, that's a strange thing to say. But that voice was loud. It carried a lot of weight in the room. And that deal didn't get done. But you just kept looking for opportunities that had the ingredients of excess return generation. We built a process and a machine that allowed us to be a thought partner for decision makers, both LPs and GPs, to help them understand what were they good at? What should they be a little worried about? What should they be really excited about? And how could we help them do blank? And blank is the most important thing to them and their franchise in that moment. And if you have sort of a creative culture, you end up creating structures and processes and tax technology and all these other really important attributes to help somebody you really respect do blank, you earn a seat at the table the next time they want to think about something innovative and important. And that process, that thought partner process, is what my team and I became very good at. And it's the same exact process that we brought to Arctos when we started this firm. Everybody panics and wants to create their deck and create their website and because you get so insecure. We all put too much of our job into our identity that when you leave a great job, it's really important for you to tell everybody what you're doing next. We didn't do that. We just spent time working together and aligned on our passion and our niche, which are disrupting and innovating the markets in which we serve. And we do that by solving complex problems with really creative solutions. That is our ethos.
I want to go back to something you said, Ian, and I'm going to paraphrase here. If it's a structured transaction, you probably don't want to do it. You want to lack structure.
I didn't say that, but
well, you said it just now, so you may not get you said it just now. But I find that very interesting when you think about innovation and providing liquidity to GPs, because the history of your industry, our shared industry, is one where if you're smart and you have a good idea, there are a lot of other smart people that are around you that are waiting to look at that idea. And the more it's structured, the more it's copyable, and it gets copied and it gets scaled. And those excess returns you were talking about tend to go away pretty rapidly with a lot of smart people trying to do the same thing.
Yep.
And this quality of being unstructured, complex, it's interesting to me because the secular rise of private markets has been so strong over the last decade and really shows no signs of abating, that the number and type of illiquid private investors is simply growing over time. And the kinds of things they're doing are growing to be different over time. And the need for liquidity is therefore increasing because, as you well know, for most of the industry, most of these firms don't really have a balance sheet. Unless you're public or unless you decide to borrow from a bank or you're selling equity stakes to people, it's very challenging to actually have the funds to be able to invest. And when you think about complex businesses growing very rapidly, illiquid, need liquidity, to me, that says there have to be ideas here on how to innovate that are going to be evolving over time. Well, what's your view on the secondary market's evolution over the past couple of years? And how do you think about staying ahead of the competition to get to that next unstructured thing that is a good idea?
Yeah, that's a really complicated question, right? So the secondaries market, broadly defined, it started as a liquidity provider to the limited partners that invested in the asset class. And one of the things I think the secondary market doesn't get enough credit for is its role in the growth of AUM in alternatives, right? As the perception of more liquidity from the secondary market kind of worked its way into the mindset of the allocator, more allocators were willing to create an allocation to private equity or increase their allocation to private equity because of the perception of improving liquidity. Whether or not the liquidity actually got deeper over the last 15 to 20 years is debatable. I think the math would actually say that it hasn't, but the perception definitely has changed. I remember at a conference probably 6 or 7 years ago, my opening line would be, I think secondaries suck. Even though I spent my entire career in it, I think it's a tough business. But 7 years ago, I said, it won't be very long until this, what are now called continuation trades, is at least half the market. Once GPs and the secondaries market and LPs really kind of figure it out, the pros and cons, it's going to accelerate rapidly. And now you've got the secondary market, about half of its volume is providing liquidity to LPs. And about half of it is providing liquidity to LPs by becoming the quasi-exit channel for these portcos, right? But to answer your question around innovation in the secondaries market, there's also this other layer that is the market makers, the intermediaries, the Evercores, the Cavalluccians and the PJTs and all these groups. There is this industrialized complex that takes these kind of plain vanilla situations. An LP needs liquidity, a GP wants to monetize this asset. They wrap them up in a pretty book, they run a process, the process gets bid out, and then it gets consumed. I think that is a wonderful service and it meets a need, but it is a very, very difficult place for investors to harvest repeatable, scalable excess return. And so the trick is, can you find situations where that industrialized complex is not well served to solve the problem? Can you find a common thread that is a new opportunity, an unmet need, an issue, a constraint, and through pattern recognition or thin slicing, get in front of enough people that are thinking through that next most important thing and building a solution or a set of intellectual property that solves that problem in a very unique and elegant way. And do that in a bespoke way so that your counterparty has something that was very, very specific to them. If you do that, it takes a while for the consumers of the industrialized complex to understand what you're doing. And the industrialized complex has so much momentum around the fee, sort of gorging at the fee trough around the thing that's easy to package and process, that it takes a while for everything to kind of orient around to this new solution. And so you have a shelf life and it has a decay factor, right? And how easy it is to reverse engineer is inversely correlated with the decay factor, right? But it requires you to have a process that is constantly creating new IP and new ideas and new solutions. That's what we're good at, is that process. And so as long as you can keep that group together and train new people on that technique and arm them with a data lake and machinery to help continue to drive new insights and new engagement repeatedly, I think that is the key to driving innovation and harvesting repeatable alpha around these sort of tactical opportunities to provide growth capital and liquidity solutions to the leaders of the most important franchises in private equity and the biggest, most important allocators to private equity.
It sounds to me like what you're really describing, Ian, is ultimately the way to ensure that you really are safe on the ice alone, that you are finding ways to invest in a bespoke way that's innovative and that's hard to repeat, and yet at the same time is scalable, which are things that at first blush can sound like they're opposing ideas, but if you can put them all together and build a reputation for being the folks that do, quote unquote, that kind of thing, you might just get the phone call first. And that's what leads to the next creative idea and allows you to keep scaling and stay ahead of the complex that you described.
That is what I want people to think of when they hear the word Arctos, is that process. In everything that we do, that is what defines what we do as a firm. So you're probably going to bill me for that at some point, but like that.
No, we're going to bill me. Well, Ian, I know I've learned a tremendous amount for you being on the show here, both in terms of sports and understanding how what you're doing in innovation and technology around the sports landscape actually also applies thematically to the alternative investment landscape and what GPs are interested in there as they look to grow their own franchises as well. And I'm sure our audience got a tremendous education having you on the show. So thanks again for stopping by. Very much appreciated. It's great to see you.
I appreciate the opportunity very much. Thank you.
I'm Hugh MacArthur. Thank you for listening.